Check, please.
Welcome to Everything Money, the channel that didn't lose 80% on Palantir this year. 80% on 67% on Palantir. We're doing a blind stock analysis. All too often, we remind you that you need to look at financials of companies regardless of the actual name of the company. You watch videos on YouTube, and sometimes it can sway you in one way or the other, away or toward a company that might not be justified. So we're going to show Paul, the seer of seers, the prognosticator of prognosticators that he is. We're going to show him some financials of a stock from our software. He has no clue what this is, no sector, no nothing. He has no clue. We're going to try and he's going to walk you through what a successful business person, real estate owner, and stock owner, blah, 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 blah. What their mindset about looking at a company beyond just is the ticker symbol going up, and that is a buy opportunity. Paul, let's get after this company. I guarantee you're not going to know what it is, but let's get you where you might think. Oh my
God, of course I'm not going to know what it is. $189 million market cap? Yes. My company's worth more than $189 million. Just kidding.
$189 million.
Oh my Lord, 3 times? Okay, so this is maybe commodities or gold or something?
So net income. Oh wow, so net income is $67 million. You're all wrong.
Are you telling me I'm wrong because I'm wrong or because you just want to tell me that?
A combination of you're wrong. Okay. PE of 2.8. Now, our fans in the Everything Money community, our dear users, love these low PE companies. It's under all the averages.
So what I'll say is, but remember, guys, the 5-year PE is 11, which is still low, but the recent PE being so low, it shows that this is probably a fluke year. But then if you look at the free cash flow, they have $29 million in free cash flow last year, and the 5-year average is 38. So the free cash flow is actually down compared to the last 5 years, while the earnings are up compared to the last 5 years. Think about that one.
Look at the dividend, Paul.
Yeah, $15 million, 7.7%. They can afford it too. All right, next page. Income statement.
Are there any sectors that give a great dividend typically, or is it just random companies?
That's why I think it's like utilities or commodities, something like that. Commodity or real estate or a REIT.
Right, got it. Okay.
Yeah.
Here we go. Income statement, operating revenue. Let's see. This is by quarter. So 2019, 149.
Why are we looking at quarterly?
130. I think it's a younger company. 126, 167, 194, 244, 290, 285.
All right, so time out here. 149. Okay, growth there. 138, 194, 285. Growth. Okay, so they're growing. Good stuff.
Okay.
What the heck did you do there?
I thought we were able to see better. I screwed it up. Net income. Okay, so $1 million in 2019. Then they lost $2 million.
No, June.
Then they made 3, 8, 11, 2, 8, 25, and $30 million. All
right, that's growing. This is pretty nice.
You're liking so far?
Yeah, so far. I mean, that's good growth.
Are you a buyer?
No.
Shares outstanding. They are increasing, Paul.
Yeah, but not by 7%.
9.8
Oh,
to
I
11.
forgot. We're not in the years. Ooh.
Yeah, 9.8 to 11.5.
All right.
Okay, Paul, this is the shares outstanding on an annual basis, and it's much worse, my friend.
Wowzer.
Is this you can always do the math. 1.75 million to 9.8.
I mean, that's a big jump. That's 5-6 times.
This is not good.
5.5 times more, which is 450%. All right, next.
Okay, Paul, here is the free cash flow. Obviously, you're really in love with this sector. This is one of these pillars. Pillar number 7. Give it to me now.
Growing. They had one big year of negative cash flow. Okay.
So 21 million, 9 million, minus 19 million, 22, and 92. Wow.
For an average of 25. Okay, next.
Average is all over the place.
Well, no, the average is right there. The numbers are all over the place.
That's what I mean. Sorry about that. You're right. Assets over liabilities.
I don't care about this as much. Let's see the long-term liabilities.
Really? Okay.
Yeah. 157 million. Their average is 25. It's high for that, but their last year's free cash flow was 90 million. All right. I have no clue what this company is. I have no idea what the sector is. It's had a lot of growth in the last few years, but it's a small company, so that's expected.
Are you interested?
Yes, in the sense of I'd have to see the story for the future.
That shares outstanding doesn't turn you off?
It looks like it was a big jump in 1 year, a big jump in 1 year. So there's a million reasons why that could have happened. I don't know what it is. Okay. But the point is the growth is very interesting to me.
All right, 8 pillars.
Oh, I said 450. It was 550%. Whoops.
You dummy. What do you think?
Okay. Man. I mean, this dividend just blows my mind. A fast-growing company paying that much of a dividend.
Why is that? You'd think they just reinvest it instead of with their...
Yeah, if you're growing like crazy, reinvest it. You're going to give yourself so much more growth from that. I mean, was this a SPAC?
No. Oh, I don't know.
No, SPAC's usually bigger. I don't know. I don't have a clue. 189 million? I mean, this is a small company.
Do you typically avoid companies this size?
Yeah, I'm not. That's not my MO. It doesn't mean I should. You're going to make more money on smaller companies because they're often overlooked. Like, how many analysts are following this company? If anything, it's one, but it's probably zero. So, you make more money there. But I also do options on my company. You're not going to get options on this thing.
I see.
So so that's why I avoid small companies.
I would think as a normal person, these are riskier plays.
Yeah, of course. That's why there's more. That's why in this situation, they're often overlooked. So who's the company?
Paul, this is Lazy Days Holdings, ticker symbol LAZY.
That's like Lazy Boy.
They
It's
operate
Lazy Day.
recreational vehicle dealerships. It provides various products, including RV sales, which you knew RVs were off the chain last year. RV parts, accessories.
Yeah, I'm avoiding this.
Why is that?
First off, what does it mean by they operate? So is this a management company, or do they actually own the companies?
Well, it's just the dealerships then. Yeah, it's just a dealership. New
Let's
and
see
used
what
vehicles. So it's just
They have a lot of inventory, so probably they do own it. They do own the dealerships.
on-site maintenance and repairs. Yeah, I've heard over the past year and a half, 2 years, everyone says, man, RVs, they just exploded. And you can't get them anywhere except if you drive past any RV dealership and they're filled with RVs.
Yeah, you drive down to Akron Canton Airport, there's two major ones right there.
I don't understand. You can't get them, but they're all there. So,
Yep.
Okay, talk to me about this sector and why you're avoiding it.
I just look at it as it's really skyrocketed in the last year or two. So it's really coming off that. But also, I think it's a very much a luxury ownership thing. And a lot of value investors would say you shouldn't care about the market. I do care about the market. To me, it makes sense to go, wait, this has been like the easiest time to buy every high-end good in the world. And this is a really, really high-end good. Like literally, you go back and look at RV sales back in the last recession in 2008-9, and it collapsed. Why? Because the last thing, you're going to buy your RV when everything else in the world is going great for you.
I'm not trying to pigeonhole the people who have RVs, but typically it's not the same people buying Rolexes and Lamborghinis are not the same demographic buying RVs.
Yeah,
Yet these RVs are so damn expensive. I'm wondering how do people afford these these are $200,000. Some of these are $200,000
Some of them are $1 million
buses on wheels.
Yeah.
And these people are really,
they buy
really
it for
committed.
retirement. I get that. I just look at it going, that's going to be hard for me. With rates going up, things like that, I look at it going like, could I be wrong? Yeah, I could be wrong. But I look at this going, damn, like how are they going to justify this? Like how is this going to keep growing as the economy is in boom? I mean, we're back to 4% unemployment rate. Incomes are going up, et cetera. I'm like going, okay, do I think better times are in the next 5 years than the last 5? I don't think so. But I could be wrong. But to me, this is I don't get the value. So I'm out. It just doesn't make sense to me for that reason.
Do you want to stock analyze?
No, because I don't like the stock analyzer doing this one because I don't know. It's obviously a buy. If this thing is going to grow 3% a year from here on out, it's a buy. Even staying the same, it's a buy. Seth, it made $90 million last year. It's 2.8 times free cash flow.
Mm-hmm.
Put any number you want in here, like literally any number. I guarantee it comes out of buy. Do it.
Okay. So what about revenue growth?
Put 000 for revenue growth. Put profit margin, put in, if it matches last year, 666.
Okay.
Free cash flow margin. It was a fluke last year, call it 444. And then PE, put in 12, 14, 16. 12, 14, 16.
Mm-hmm.
And put in 12.5% for everything.
Okay.
It's going to come back a buy. All day long. Boom. I didn't have to do it with the numbers. That's with 0% revenue growth.
What was going on? I don't get it. They're gonna make fun of me because of that face. But what do you mean? I don't understand how this is a buy.
Because the multiple's so low right now. You're buying it. Last year they made $90 million, and the market cap's 180.
I see.
And by the way, let's go see their balance sheet now. Look at their balance sheet. Let's go see their total current assets, $240 million. Okay, they have more liabilities than that. Okay. Still, this is an insane buy if you believe that the company is going to stay at least the same. But then I ask you, Remember Peloton? Peloton. Look, it's going to the moon. Yeah, but a lot of people bought Pelotons, they're stuck in their house. A lot of people are buying RVs because money's easy right now. Incomes are going up. What happens when that stops? What's going to happen to the RV market? It's going to plummet. Because RV is literally the last thing in the world you're buying before anything happens. And I'm quite sure it's the easiest thing you give up in a repo. You know what? Just take the RV. Don't take my car. Don't take my house. Take the RV. So
unlike other stocks and companies that flourished through COVID, is why doesn't this have a 120 PE? I know why.
Because it's too small. People don't know about it.
I see. Because normally we're avoiding these because the PE is 300.
Well, look at Camping World. Now, granted, Camping World's got a lot of, we don't look at Camping World. It's got a lot of retail to it. But the whole point is, it's like these companies flourished after COVID shutdown stopped. It's just going to keep going. Sorry. It just kept going. And now, is it going to keep going? I don't know.
Mm-hmm.
To me, it's not worth, the juice ain't worth the squeeze. It's had too good of a year in too good of a market for me to feel like that's going to be able to continue. That's just the way I'm programmed. Like, I don't see that and go, oh, this is going to go on forever. I look at that going, oh, man, that's a really big jump for 1 year. How is that even possible?
I guess what others would perceive as an amazing jump, you're very cautious of that.
Yeah, I'm just like, okay, if all of a sudden I was a C student and all of a sudden got straight A's one quarter from some fluke, I don't know the reason why, do I think that's going to continue on? I don't think so.
Maybe you went to Michigan for a quarter.
Yeah, that's true.
Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of $1,000s, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
All right, that is our take on Lazy Day Holdings. Paul's avoiding at the moment, but we'll certainly look at this in the future. And if you're interested more on our 8-pillar process that we went through, there's a video here in the top right corner. You can click on the card and see a more in-depth definition of the metrics we use when analyzing a stock. That is our take on Lazy Days. Well, funny company, Paul. So connect with Paul and I and Mo in the Everything Money chat, and we'll see you next video.